Hey guys, this is Randy. Today is Monday, April 11th, and I'm going to do this video. I'm going to cover the shipping stocks. I posted these about a month ago in the trading room. They're non-official trade ideas. They're non-official because on a scale from 1 to 10, these are right up there with a 10 as far as aggressiveness. And there's also so many out there. When I trade the shipping sector, if I'm not mistaken, well, I do recall there used to be a shipping ETF. I don't know if it's still out there or not. SCA. Let me check. It's been so long. Me personally, yeah, there it is. Guggenheim shipping ETF. That's ETFs are always a safer way to play a sector because you're diversified. Simply the diversification of one of these stocks or even a handful go to zero. Bank file for bankruptcy protection. A lot of them are flirting with that. When you see a stock under a $5 level, especially under a dollar level, penny stock, there are some serious fundamental issues there. So, this is always a safer way to play. And I'm not putting this up as an official trade idea, but for those of you that might be interested, here's some lines. I'm just doing this chart as I go over the video. You can see pretty solid intersecting resistance here. So if we pushed up to that 1250-ish area, we'd have to take out both that horizontal line, that previous reaction high. There were some reactions around there in that downtrend line, and that should be smooth sailing. I don't know if you can make it out here. The volume at price histogram is pretty thin. That would most likely bring us up to either anywhere up in this range right here. So there's plenty of work to be done. I don't see well, almost a divergent low from this point to this point. So yeah, you could say a divergent low. But again, I don't want to spend too much time on the shipping ETF. If and when I decide to add that as an official trade idea, that'll go on the front page. I just wanted to do this video for those of you that are experienced and/or aggressive traders. Let me just get these disclaimers out of the way, disclosures, whatever you want to call them. I can't give investment advice. That's not what I'm giving here. I'll show you what I'm trading, what I do, and how I trade these. And I cannot emphasize the fact that you will get wiped out trading these stocks if you put too much money into these. I use the term beta adjusting position size, meaning adjust your position according with the beta or the volatility relative to something like the SPY, and these are just extremely volatile. So just to give you a rough example, if you normally trade stocks, take a position in, let's say, the SPY, which tracks the broad market, and your position size on average is $10,000, you don't want to put much more than 500, maybe even a few $100s in these names. In fact, what I like to do in trading the shippers, when I see the sectors on fire, number one, I'll never trade a shipper even with a bullish chart if the sector is not confirming. I always say birds of a feather flock together. What I mean by that is all stocks within a sector, give or take, the majority of stocks are going to rise when the sector goes up. If you're trading GDX, I can assure you that the top 10 holdings in GDX, if your move is right and GDX goes up 20%, 9 out of 10, if not 10 out of 10 of the top 10 holdings in GDX are going to go up along with it. And they'll probably outperform, and that's what I do. My knack is I can identify, you give me a sector, bullish or bearish, and I can usually dig down within there and pick out within a bullish sector, the most bullish chart patterns, and vice versa, in a bearish sector. So, all right, enough on that. Let's just look at the charts. This is Eagle. Now, to try to put that whole risk return thing in perspective, for those of you who recall, I posted these about a month or so ago in the trading room. Eagle, a whole bunch of them. We're going to go over a lot of those same names here. And at the time, I don't recall, I haven't referenced that post. I was long Eagle, so I know it was somewhere in here. And that stock popped. I have to grab over here. If I try to grab right here where prices were, what happens, excuse me, what happens in TC 2000 is it'll grab that line right there. So I'm going to move to the right, right here, about where Eagle was at that time. What I'm doing is I'm moving higher to measure this move, and that was a 2-day move once it broke out. And that measures, you look at the box to the left and down right above the bottom in green, you'll see plus 368.17%. So that's a 368% gain in just a couple days. Then What did the stock do from there? Well, I'm going to grab that high to the right of it here, that same price level, move down, and it dropped over 90% in the next few weeks here. You can see all the red candlesticks. And what did it do from there? Well, from the last few days alone, the stock is up 182%. So if that doesn't put the gains and losses into perspective for you, and if you're only, focusing on the gains and saying, oh my gosh, I can make 360% in a stock in just a few days. If you're not looking at what a 92% loss will do to your portfolio, because remember, guys, in trading, and this is simple math, if you lose 50% on a position, you then have to make 100% on that position. It must go up 100% from that point just to get back to even. All right, so you put 100 grand in something, you lose 50%, you're down to 50,000. For 50,000, just to get back to 100, that investment now has to post 100% return. So losses can be debilitating and hard to get out of. So stops, and more importantly, don't play this sector if you're not experienced and nimble. But with that being said, I know there's a small subset of traders out there. I've talked to quite a few of you that like these trades. So there it is. Here's my levels. You can see them on the chart. Eagle punched up through here today. This line here, I have it at about 78, call it 80 to be safe. So you want to see another thrust up through there. There's a gap. What it did actually, I didn't have it drawn out here. It backfilled this gap today. See that gap right here? And boom. So the thing about the shippers, when they're moving, and this is important, when they're just kind of slogging around sideways, I don't even pay them attention. But when they're moving, they work extremely well on the technicals because that's all traders have to go to. This move was nothing to do with fundamentals, nor was this. These are technical moves. These are traders, and like I say, there's no other sector that I know of out there that when it's hot, it's on fire. And when it's not, meaning when it's falling, it can come down just as fast or more than it went up, as you see here. Why does that happen? Well, here's my watch list for my shipping stocks. Look at the market cap. They're sorted by market capitalization. So this isn't an all-inclusive list. It's just a list of stocks I've followed over the years. There's Eagle at a whopping 18 million. That's the market cap of that company. Go down here to Paragon Shipping, $320,000. I'm sure there's quite a few people on this board that can, buy that entire company right now. In fact, go up the line. The second one I have on here, DHT. It's a $518 million company. That means if you add up all the shares of stock out there, it only takes $518 million to buy them all. That's what they're worth. So. It's that thin, low float, if you will, low market cap that causes such a violent movement when there's any buying or selling pressure because there just aren't a lot of shares out there to absorb it. So that's the reason why these things are so volatile. And you look at the prices. There are some that are, more stable than others. But when you get down to these low price guys, this thing could go away tomorrow. You can wake up in the morning, have a position in this, and see the stock down 80-90% because it's filed for bankruptcy protection. So that's enough. I really can't do enough on that to try to convince you if you're not familiar and don't know what you're doing with these to stay away. But with that being said, here's some targets. So if it takes out 90, we pop up here. I should probably adjust that line somewhere around here. The 134 area, so that'd be a 40+% move. And ultimately, I could see us hitting this downtrend line again that's begun to form with that last reaction high, which was right up here to that after that monstrous 2-day pop. So there's some levels to play. That's just one of many, and that's one of the larger as far as market cap. Again, still only an $18 million company. DSX. If I recall, and you can check I think I did a video on this. And if I'm not mistaken, I talked about this stock at the time. I think it may have just broken out. And what I had said is that looking at this wedge, that breakout was premature and likely to fail. This was a trade. I took it, if I recall, I took it over this level here and took the pop on it and then got out. And my expectation, if I'm correct on this, I believe I was talking about this stock, is that it would probably have to come back, that breakout would fail, it would have to come back in the wedge work its way down a little bit more before a sustained and lasting breakout. So now the stock has gone on, and you can see I talk about the technicals. We zoom in, you see how well it's acted off that line. I have not modified this trend line since, and you can see how that breakout occurred. We had several candlestick wicks. Now the wicks or the shadows, those are just intraday breaks, so you want to see a solid close above. This was again a whipsaw. I believe I predicted that to be a whipsaw. Prices came back in. Now this could be the real deal. It was confirmed on volume. You note this large volume candlestick right here, above average volume, pretty healthy, nice impulsive action. Like I said, these stocks trade very well in the technicals. When you see a breakout, you don't want to see a little wimpy candlestick right there above, a close above. You want to see an impulsive, powerful candlestick confirmed on volume. And like I said, I like this a little better now because it's little more into the wedge, and at this point, if it fails again on this breakout, we'll just have to take this downtrend line away and revise it, because that downtrend line, in my opinion, will be no longer valid. I'll tolerate one or two false signals, sell signals, whipsaws, or buy signals, but anything after that just destroys, in my book, destroys the validity of that trend line. So this would then be our new trend line here, and one to watch for too, because now, if we pull back here, we've now had a third reaction off this trend line. So this trend line will become valid, and this will be our next buy signal in Diana Shipping. And we have a very nice level here. I believe this was my target before, around the 350, just over the, that line's at 352. And as I say, I don't set my sell orders at 352 if that's where resistance is. I like to set it a little shy to avoid missing a fill in case that stock reverses just shy of resistance, because too many people are watching that level. So, 348, 347, whatever you're comfortable with. So again, pop up through there, and it may not look like much, but from 315 up to the 350 level, that's showing about a 12% gain. So let's say you'd get 10% on that pop. But more importantly, the chart has been firming up. There's a divergent low down here, positive divergence. And so I'm looking at, especially if this market doesn't roll over soon and we're heading to new highs, that's going to show the economy is stabilizing, everything's doing well, and the shipping sector will pull itself out of this rut that it's been in. And I would not in the least bit be surprised to see Diana roll up here and pop up to that $6 level. That is a very well-defined former support shelf, now resistance, and that would be like a magnet if we got anywhere close to that. That's about a 93% move above current levels, so well worth the risk. Again, if you protect your downside, if you're in it, and let's say things don't pan out, this would be the last stop level that I would use, a lowest stop level around any move around that under that 215-ish level. Yeah, it's quite a ways away, and that's not at this point not what my stop is. I'm just showing you where the critical support is. That's about a 30% drop. So 30% drop for a 94% gain. That is well within a, my preferred 3-to-1 RR, meaning 1 unit of downside risk, i.e. 30%, for 3 units of upside potential, i.e. 90%, in this case 96 or so. So that's a possible level. Although if we break out of this uptrend line, this right now, this line here around 280 should act as support on a pullback. As you can see, it's the top of this trading range, really, if I box it here. I know sometimes all these things that I'm seeing and discussing are clear in my mind's eye, but let me just draw it in for everyone. This has really been a basing or consolidation range, and we popped out of there. We popped out of it once, fell back into it. As I said, this was just a momentum fueled. The traders got in and played with these for a few days, and some of you caught some of these, I caught some of those, and then got out. That was a quick hit and run situation. This one I'm looking possibly to let these things ride. So if we break out here, I might just ratchet or trail up my stops and see if this thing can run. But of course I'll be keeping one eye on the broad markets, because if the broad markets roll over, these stocks with these questionable fundamentals probably aren't going very far. NMM, It's a tongue twister. Navios Maritime Partners, pretty nice chart. You can see the downtrend line, and a lot of these are the same levels I posted. I think I did a video on these before. Little fake breakout there, whipsaw signal, fell right back in, then a breakout and a back test, and so far price is moving over. So what does this one have to do from here? Well, these lines are the same lines. I don't believe I've modified this chart since the last video, and you can see how well it's working off there. We hit this resistance level here, pulled back so far today. This is a big one. Let me color it for you if you're trading this stock. That would be, it's at 174, so you maybe call it 175 to be safe. It's defined by this reaction high right here. There's a big fat gap here, but that's really that reaction high is what I'm concerned about. And then above that, we have the top of this gap right here. That is 203-ish. You know, to zero that in, that might not be exactly 203. Just grab that candlestick and take a look. Low 125. Nope, did I do that right? Low on that candlestick was 206, so that line would actually be at 206. And that would be a target there. But again, this chart begins to become increasingly bullish. And again, these divergences are what tells me that instead of just trying to trade another pop, one of these pops is likely to stick for a lasting trend reversal. And I would, after the 206 level, I would expect us to move up here to about the 268 level. And I'll have to study the longer term charts. I'm not looking that far ahead right now. Don't want to get too excited, but I could easily see this guy going up to that 624 level. And again, it depends largely how the economy and the broad market does going forward. But right now, the charts are there. This is an unloved, unwanted sector, and that's what I like to buy. I, have a bit of contrarian in me. Sometimes that doesn't work out, but at times it does. And when you can catch a bottom on something like this or a top, the gains are enormous. So again, small position sizes. I like that shotgun approach. By that I mean instead of taking that shipping ETF, or I should be more clear, instead of taking one or two of my favorites here, I'll take half a dozen or a dozen of these, sprinkle out a little bit into each one, obviously strategically based on the charts, those with the best charts, on GOGL, Golden Ocean. You don't take it right here because it's just below this 79 cents resistance level. We've had a few intraday pops. You see the candlestick wicks? 1, 2, 3. But look how many times this stock, I can tell you, more than likely will explode if and when we get a sustained, solid and sustained break, meaning either a daily close well above it, penny or more than just a penny or two above it, or a big intraday rip. Watch for volume. See why these breakouts have failed so far? This one had some volume, these two here, but they just didn't stick and they didn't close. So the longer the space forms, the more powerful it is. And we get a break here, and this thing will probably not even blink until it hits that 125-ish area. So you're talking a move of, the younger me would do that in my head, but let's see. Yeah, good 50% on your money if that happens. And again, it cuts both ways, so I'm not trying to highlight only the gains. There's a well-defined, the bottom of that support range is pretty well defined around the 63 level. Again, let's just draw it out. So you can see here this basing pattern right here. And we just need to take the top of that out, and then we run up there. And again, ultimately, and I'd hate to even get this far ahead on these right now, but they can move. I don't think it's going to go there overnight. And again, it'll take some wind in its sails to get there, meaning some bullish developments in the shipping sector, which don't have to, but should coincide with some bullish economic data. But, again, these shippers have been so beat down and left for dead that it wouldn't surprise me to see the market roll over. And sometimes you see that with low-priced, very low-priced stocks like this. They tend to not move in sync with the broad market so much because the institutions don't hold these. They're not being sold with all the stocks that are in the SPY and the Q, which get, there's forced selling on those during a downtrend, especially a sharp sell-off in the market. So it's been my experience, a lot of these small, obscure penny stocks that no one's watching, you can trade these in a bull or bear market, and you can probably have just as much success trading them in a bear market because, again, there's no forced selling. Just watch the sector. And again, take it as a whole. You see this one break out, take a look at the others. If you see those also taking out comparable resistance levels, that means the sector is in play. That's when you want to engage it. If you see this one break out and the rest are not breaking out or they're moving down, this breakout has a higher probability of failing. Dry ships. This one, it looks ugly. You'd have to probably put a PPO on here to really gauge. Yeah, the PPO down here. As you can see, the MACD's flattened out. This is where a PPO comes in better. And you do see, as I'm drawing here, bullish divergence. So yeah, I can definitely put a nice pattern on here. Numerous reactions there on the trend line. It's got a ways to go to get up there, but this one you could play just for an initial move up to the top of the wedge. Let's say the sector does pop now. You're going to have a strong move, which is about almost 100% return just to get to the top of that wedge. It would be 100% if it did it, within a few days, which again doesn't surprise me. You can see the move back here was much more than 100%. At that point, we'd be a little extended. My guess is we'd have a MOMO overshoot, I call it, meaning momentum fueled overshoot, and then probably come back in, work off the near-term overbought readings, and then go ahead and pop up. So the charts are in play. The bullish developments are there, and again, a lot of risk, but a lot of reward if they do work out. So let's see here. A couple levels I'll give you. 1264-ish or 1265-ish, call it 750-ish, and again set your targets a little below. And I think that's what I target. If and when this wedge clearly gets taken out, those would be my initial targets there on tri-ships. NM, Navios, Maritime. Nice looking chart. I had this, I don't know if this is where we were when I posted these a few weeks back, but you can see the divergent low. You can see the divergence a little better on this PPO. I'll probably just leave that up. Maybe we'll just 86 this MACD for right now. Let's do that, get out of the way. All right, so now we can see a little bit better. As I mentioned, the PPO is a cousin of the MACD. It works better on stocks with a large price range. In other words, this chart right here, we're looking at a daily chart going back 2 years, 14 down to 70 cents. That's a huge range. And this is also why I use a log scaling. If we put an arithmetic scaling on there, it's just a different story, different chart. It's not really representative, in my opinion, of the on a stock with a large price swing. So there's your levels. We had this nice falling wedge here. We got to pop out of that. Look at that. That was a move that, and again, these work so well to the technicals, these stocks, especially when the sector's in play. And that led to about a 70% gain. Came up. Now we had this reaction here. So this is definitely a level to watch. And I'll set an alert right now. So I'll get a price alert when that level's taken out. You can see my targets. This one's a little bit over. That's pretty close, so you have to be careful there. There is a level there, and if and when that gets taken out, then we'll probably run up to that 242 area, maybe 250, somewhere right around there. That's 250-ish, and then we have a pretty decent resistance level here at we'll call it 325. We have this reaction high right here and a couple reactions from above. And so this would be probably what I'd consider my final target on this trade if I decide to tuck some shares away and trail a stop on the way up. TNK, this one's pretty nice. Here, let's look at a weekly chart. This was what you can pull this one on the side. I put this as a setup way back here with a target. This was my final weekly target. And, again, it's just so these aren't hindsight posts. At that time, that was calling for, 120-something% move in the stock, and we got it and then some. went up to this level, nice support resistance level there, and rolled over. Strong move down since, but look at this support level, beautiful. We go all the way back to 2012, reaction low, reactions from above, and we're there again. Nothing crazy bullish on the weekly charts. So support is support until and unless broken. If it's broken, solid weekly close below this line. That line's around 340. Well, I have it at 342, so call it 340. But you can see it come in here on the daily chart as well. Now, what's nice about it, and again, these are the things that we use in trading. When a stock falls to support, it's going to do one of two things. It's going to hold that support level and bounce and reverse, or it's going to break through support. And it's these indicators and oscillators that help us determine where we want to look to position long on a move down to support, or where we want to look to get ready to position short, expecting a break of support. So because we have the bullish divergence in place, I'm more apt to position long off the support level with a stop below rather than wait for a break to short TNK. And if and when that level gets taken out, let's say we reverse here, here's a downtrend line to watch. Rough sketch. Yeah, I think that's pretty valid. So that would bring us up to that level. And again, I can't give you a price target because downtrend lines are dynamic, meaning they change every day. The value comes in lower and lower. So this would look something like this. Let's just draw it out here. A reversal from anywhere from where we're at currently up to that downtrend line, maybe an initial reaction back, and then ultimately power up, break on through it, and head up to that. Looks like, where's that at? Let's put that value up for you guys. 486. I'll call it 480. Yeah, I need to bring that down a little. Capture these reaction highs here. So call it 481, maybe 482. Set your sell limit order anywhere from 470 to 475 on that would be my preference. And I'd expect a pretty significant reaction there, but if that gets taken out, then we have a gap to contend with up here, which would act as the next target area, either the top or the bottom of that gap. All right, let's move on. Front line, not bad. Nice little wedge action going on here. Let's see how I want to draw this. Yeah, I think I like the look of that one. I think that probably works with maybe an alternate downtrend line in play here that may come into play. There's a few reactions up there, so this is just a maybe, something to watch. And I can definitely see some very nice horizontal resistance here, which also comes in. So former support, you can, oh wow, that's just a great level here. Let's put that up. This would be a target for me on front line. I'll call it 11. You can see all the reactions there. Nice bullish falling wedge pattern confirmed with bullish divergence. And this one would look ideally something like this. You move up to that wedge, eventually a breakout, and a move up to the, if and when that wedge pattern breaks out, move up to the $11 area from current levels. And in a lot of cases, I'll position this one. I like it. I'll position it a little bit inside the wedge, probably after this video, and then add to it on a breakout of the wedge. But, it's a 38% gain. Keep in mind, this one is a little healthier, at least price-wise. Doesn't mean the fundamentals are great. It just means it's not a penny stock. They're not having to worry about delisting, being delisted or anything like that, at least at this point. So it's a $7.5, almost $8 stock, $232 million market cap, and looks good. Some support here back from that gap. I'm just trying to look and see if this one might be going any lower. Anything's possible, but there is some support there. And if that level was taken out, you wouldn't want to ride it all the way down here, but the next support doesn't come in all the way down to just right around the $6 level. These divergences could use a little work. I'd like to see this PPO curl up and confirm this bullish divergence. The MACD or the RSI has turned up so far. But again, alternative or second sell signal or buy signal comes on a break above that wedge. And there is also, really goes back to about right here. This is resistance, by the way. Something you have to watch for that will, if the stock moves up, it's going to come into play right around the top of the wedge. And that's at 874 roughly. And you can see the reactions here. quite a few. There's a gap right there. There's a gap right here, right before that 1 and 5 reverse or 1 and 5 split. Yeah, that'd be a reverse split more than likely. We have a gap right here perfectly, and reaction highs there. So there's a level to watch. And actually, I like that. Not the fact that we have dual intersecting resistance levels. So what happens is, if and when this stock starts to power up, if it does so in the very near future, it'll be able to challenge those at the same time. So if it's able to surmount both levels, that's a double break of resistance. That's very powerful in my book, and that will likely propel the stock up to that $11 level. Although I will tell you, as I'm doing this, I do see some, I'll call it minor to moderate resistance here around the $10 level. So, if you want to get a quick pop, from you take it now and you add some on that breakout, then even from the 875-ish level, you have still about a 15% gain. So not bad for a quick trade. But this is where I think, even if we get a reaction there, if the sector still looks good, we're probably headed up to that $11 area. And again, that'll probably come in with this downtrend line at that time, because these things, they can go vertical, but if it takes a little while to get there with some zigs and zags along the way, it might look something like this by the time it got there. And then you have intersecting downtrend lines, resistance and horizontal resistance, and that's where you expect to pull back. You maybe reverse it to a short or book some profits and look to buy back in later, but I would probably be out at that point. Okay, I'm just looked down at the time on this video and I hit the half-hour mark, so I'll have to wrap it up. There's so many out there, but we're getting down to the market cap's getting so small. I'm not going to go through many more. Salt, there's a key level 406, and then if and when it takes that out, little resistance there around 687, and then this downtrend line, that would definitely be my final near-term target. Ultimately, it might work its way up there to that $16 level again if the sector holds up. Sting, let's just more Scorpio tankers. KEX, this one was a recent trade idea on the site. We hit that first target. You can see we've just pulled back and below and tried another attempt at it and have failed to break out since. So if and when that goes, and you'd want to actually look at the reaction highs, we had a few momentum carries that went over that trend line, so you now have to take out about 62.75. And that would hit that former potential second target zone that I had, and ultimately maybe take it up here at around the $71 level. And we'll leave it there, guys. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoy, and again, be careful with these if you trade them.